U.S. crypto regulation talks are heating up, with three major themes emerging. After many years with no regulations forthcoming, the U.S. is finally trying to regulate cryptocurrencies. Will they be successful, and what will this lead to? Anything good? Here's what they mean for investors, and we take a look at the main themes here. The news about cryptocurrency regulations and what it means. The fact that cryptocurrency is decentralized and unregulated is one of its core ideas. The U.S. government, on the other hand, seems unconcerned about crypto's founding ideas. In reality, cryptocurrency regulation has been a hot topic among lawmakers and government organizations in the United States recently. Just last week, senators debated proposed crypto legislation as part of the $1 trillion Senate infrastructure plan, and SEC Chair Gary Gensler discussed the SEC's role in regulating digital assets. On the subject of new cryptocurrency regulation in the United States, a few important themes have emerged: preventing cryptocurrency crime and tax fraud, stablecoin regulation, and the potential for investment vehicles like crypto ETFs and other funds. The decentralized nature of digital currencies, which, unlike traditional currencies, are not backed by any institution or government authority, is a significant draw for many crypto aficionados. However, regulatory guidelines can aid in the protection of investors. As much as I admire the decentralization and absence of government involvement, I'm delighted they're paying attention because there are lots of frauds with cryptocurrency, says Kiana Daniel, author of Cryptocurrency Investing for Dummies. Here's a rundown of the proposals we've seen so far, as well as how they might impact cryptocurrency investors in the future. Cryptocurrency crime and tax evasion. Cryptocurrency regulation is included in a component of a $1 trillion bipartisan infrastructure bill that is now being debated in Congress. Companies that enable digital asset trading, such as cryptocurrency exchanges, would be included in the definition of a brokerage under the clause. Increased tax reporting responsibilities would result as a result of the shift, which would aid the IRS in tracking crypto tax evasion. According to the Washington Post, some politicians and industry groups argue that the draft's language is too broad. SEC Chairman Gensler spoke Tuesday about the need for increased regulation to help prevent more ransomware attacks like the one that took down the Colonial Pipeline in May, as Congress prepared to vote on the proposed law. The pipeline attack was one of several high-profile examples of hackers attempting to extort Bitcoin ransoms. While Gensler did not specify how the SEC expected to assist in the prevention of these crimes, he did state that the agency would continue to use all of its powers. During an address at the Aspen Security Forum in Colorado, Gensler said, "The SEC will continue to take our authorities as far as they go." According to a recent U.S. Treasury assessment, Bitcoin poses a serious detection risk by promoting illicit activities, broadly including tax evasion, echoing Gensler's worries. How does this affect investors? Companies that facilitate crypto trading would be obliged to report tax information about those trades to the IRS, just like broader traditional investments like stocks, starting in the 2024 tax season under a proposed law included in the infrastructure package. According to Shian Chandrasekera, CPA, head of tax strategy at Cointracker.io, a crypto tax software startup, the measure is typically investor-friendly because it makes crypto tax compliance easy for investors. This is because if the bill passes, exchanges will be required to send 1099-B tax forms to investors that include cost basis information. That implies the exchange would keep track of taxable transactions on the platform, such as how much your Bitcoin was worth when you acquired it and how much it was worth when you sold it for US dollars. Currently, only a few exchanges provide this information. According to Chandrasekera, this will greatly minimize the crypto tax reporting load. It's already crucial to keep track of any financial gains or losses from your crypto trading, which you'll need to declare on your federal tax forms. However, this rule would make it much more important, as the IRS would be able to uncover any examples of tax evasion involving cryptocurrency with more ease. The regulation of stablecoin. Because the majority of what happens on cryptocurrency exchanges and platforms is cryptocurrency to cryptocurrency, Gensler stated that stronger stablecoin regulation could help with the cryptocurrency crime problem. According to Gensler, unscrupulous actors may be better able to escape public policy measures and other sanctions targeted at preventing money laundering and guaranteeing tax compliance by avoiding the use of the US dollars in direct crypto-to-crypto transfers. Stablecoins, much like USDT, are a sort of cryptocurrency that is tied to an existing currency or a tether. USDT's value is determined by the price of the US dollar, hence it is always $1. The SEC isn't the only agency with an interest in the matter. While testifying before the U.S. House Committee on Financial Services earlier this month, Federal Reserve Chairman Jerome Powell also mentioned stablecoin regulation. We need a right regulatory framework, which we frankly don't have. Powell added, if stablecoins are to be a significant part of the payments world. Treasury Secretary Janet Yellen recently echoed this sentiment, convening a meeting with the president's working group on financial markets to discuss the rapid growth of stablecoins, potential uses of stablecoins as a means of payment, and potential risks to end users, the financial system, and national security, according to the meeting readout. What does it mean for investors? In July, over 3/4 of all crypto trading platforms saw transactions between a stablecoin and another token, according to Gensler. While the exact nature of any regulatory action on stablecoins is unknown at this time, any regulation could have an impact on investors who own or use stablecoins as a part of their portfolio. Many exchanges charge fewer costs for crypto-to-crypto trades than they do for buying crypto outright in dollar-to-cryptocurrency transactions, and stablecoins' low price volatility makes them a potentially better option for purchases than transferring cash each time. However, they are not as good as a store of value for investors for more volatile cryptos like Bitcoin. Experts advise sticking with more known cryptocurrency like Bitcoin or Ethereum if you're hoping for long-term growth. In the event that any guidance is issued, you should choose a cryptocurrency exchange that complies with evolving federal and state regulations in the United States. Many well-known high-volume US-based exchanges such as Coinbase and Gemini are among them. At present time, I only buy Bitcoin assets from regulated brokers because we have the luxury of doing so. Of course, some countries do not have it, but we do, Daniel explains. ETFs. While the government investigates how to make it more difficult for people to utilize cryptocurrencies for illegal activities or tax evasion, there is still no method for Americans to invest in cryptocurrency through standard investing accounts like Fidelity or Vanguard. Despite multiple proposed funds from various institutions and exchanges, the SEC has yet to approve a cryptocurrency ETF, exchange-traded fund, but Gensler hinted that it might be on the way. We do it in the stock market. We do it in the bond market, Gensler added. I believe we'll have some new ones under what's called the Investment Companies Act, and when paired with other federal rules, the law provides important investor protections. He says, while conceding some ETFs have previously been filed with the SEC. According to the SEC, the Investing Corporations Act compels companies, including mutual funds, to publish financial and investing information on a regular basis. Jeremy Schneider, the personal finance expert at Personal Finance Club, says that until an ETF is approved, there isn't really a method to buy an asset that closely tracks the price of a certain cryptocurrency. As a result, the only option for investors to do so effectively is to purchase coins directly from an exchange. While there has been some debate about whether cryptocurrencies are securities and thus subject to SEC regulation, Gensler clarified that every initial coin offering, or ICO, he has seen is a security. Generally, people who buy these tokens are anticipating profits, and there is a small group of entrepreneurs and technologists who are standing up and nurturing the projects. I believe we now have a crypto market in which many tokens are unregistered securities that are not subject to statutory disclosures or market oversight. However, according to Gensler, the SEC has the authority and that our federal security rules apply. Cryptocurrency ETFs are not yet accessible in the United States, but they may one day provide investors with a method to invest in cryptocurrency without having to acquire it directly from an exchange. If you're interested in crypto, these funds like traditional ETF or index fund can help you diversify your assets among multiple coins. However, they're still as risky as any other crypto investment. So if you're waiting for a Bitcoin ETF because you're afraid of the risk, you might want to reassess whether crypto belongs in your portfolio at all. Meanwhile, Gensler's assertion that every ICO is a security may lead investors to seek protection from the SEC when regulation becomes more solid. What's your take on the U.S. involvements in a decentralized system? Will their regulations actually work? How can the system be streamlined to sidestep unnecessary government involvement? That's the end of today's video. If you enjoyed the video, hit the like button and comment below what you would like to see next. Also, subscribe and hit the notification bell if you're new to the channel and would like to be notified when we upload more content. Thank you.